Hello, everyone. I'm so excited to welcome you back to another episode of our weekly series on price action based technical analysis. Today, we will be delving into the XAUUSD chart and dissecting its recent movement. Last week, we witnessed predominantly a range bound trading activity with price confined within a specific range. However, despite this consolidation, we managed to capture the initial bearish leg with approximately 200 pips before encountering a significant barrier at the 1817 zone, as you will be seeing in this commentary scrolling on your screen right now. If you would like to revisit this commentary for educational purposes, you can find the link in the description box of this current video or at the top right hand corner of your screen if you're watching on my YouTube channel. After the release of the US NFP report on Friday, we saw gold increased buying interest during Friday's trading session. The question arises, as gold prices reached a level enticing enough to spark buying opportunities this week. Well, as we prepare for the upcoming trading session, I have conducted a comprehensive analysis of the current market condition utilizing simple parameters such as trend lines, key levels, and chart patterns to gain insight into the historical movement within the XAUUSD market. However, it is important to note that this video is for educational purposes only and should not be considered as financial advice. My aim is to equip you with a deep understanding of the XAUUSD chart and enhance your proficiency in price action analysis. Remember, Forex trading carries inherent risk, so always exercise caution and consider consulting a professional financial advisor before making any investment decisions. Now that we've established our foundation, let's dive straight into the analysis. Expanding upon our technical analysis from last week's session, a pivotal focal point on the daily time frame emerges around that 1810-1800 zone. Now, our next step here involves zooming into the lower time frame to discern the recent reaction of market participants within this critical structure in recent times. Now, before I scale down, I would like to emphasize the importance of this key level for this week, that is the 1810 area. Now, if we zoom into as far back as last year, May, you will see how this level was playing a major role as buyers were trying to take price to the upside here, and not until the month of July we witnessed the breakdown of that structure. Now, throughout the month of July and August, price remained below this level, and not until December last year that we saw price climb back above this 1810 level. We saw a retest of structure in March, and since that moment, price action had remained above this key level. Now, look at what happened. Fast forward to last week's trading session, we saw how price came back into that structure despite the strong bearish momentum we have been witnessing here in the last couple of weeks. As soon as price got back into this area, we begin to notice buy pressure resume around this area again. Now, at this juncture, you would agree with me of how crucial this juncture is right now. Depending on how participant in the market reacts to this level is likely going to be giving us an idea of where price will be going this week. If the buy pressure continues, then we are likely going to look out for more buying opportunities to incite an uptrend scenario. And if price breaks down the structure, we shall be looking out for selling opportunities below this level. Now, with the information we have gathered here, I would like us to run down into the 4 hours time frame where I was able to identify a simple setup we will be using to guide our trading decisions for this week. But before we scale down into the 4 hours time frame, it's important that we take note of the fundamental factors that will be affecting the sentiment in this market this week. And in that regard, we want to be checking on the economic calendar, as we all know now that these fundamental factors often manifest on the charts in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, on the economic calendar, we usually focus on high impact event, and in this case scenario, we are going to be looking at the US economic docket. Now, the first high impact event for the week is coming in on Wednesday, October 11th, and that is the Producer Price Index. Then we also have the FOMC minute on that same day. Then on Thursday, October 12th, we have the Consumer Price Index, and fast forward to Friday, October 13th, we have the Michigan publication of the Consumer Sentiment Index. Now, with the information we've gathered here on the economic calendar, all we want to be doing right now as technical traders is to dive right back into the charts and look out for patterns and structures that will make us position ourselves ahead of this event. Now, scaling down into the 4 hours time frame, this was what I was able to come up with. And let me zoom right in so that we can see things more clearly. In fact, it's a very simple setup we have here. Now, look at what has been going on in this market throughout the course of last week. After that bearish move, we saw price confined within the 1,830 level, and that key level I identified, I showed you on the higher time frame, had the 1,810 level to emphasize the level of indecision at this point in time. And of course, you know how we do it in this community. When price action falls into a range like this, we do want to be exercising patience, waiting for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown retest of the support line to give us an opportunity to sell. Now, with the situation we have here, hold on a second. All right. So with the situation we have here, following the strong impulsive bearish move that brought us into the structure, one thing I was able to take note of here is the fact that sellers have begun to find it difficult to continue that momentum, as you will see that around the 1,815 and the 1,810 area had become very difficult for the sellers to break through, hereby making me to identify the zone here as a temporary demand zone. Now, the question going into the new week is, will this level or zone become a platform to incite buying opportunities for this week, or are we likely going to be seeing a breakdown of the zone, taking out all the buy positions to incite a downtrend continuation? Now, with the way things are looking right now, I want to consider this to be a reversal pattern, as I can see with the nature of the wick of the candles around the zone here. It's a sign that sellers are finding it difficult to settle into or below the structure. And whenever we project a potential reversal pattern, the next thing we want to be doing is to identify the neckline, which interestingly shares a confluence with that resistance level at the 1,830. Now, what I will be looking out for this week is a breakout of structure, which appears to have happened here on Friday. So I want to see price remain above this 1,830 level too for buying opportunities in this market. However, in as much as we're looking out for buying opportunities, we cannot ignore the potentials of sellers. Of course, it has been a strong bearish momentum in this market in the last couple of weeks, and we also want to consider what potentials or what opportunities sellers also have. Now, for me to sell the XAUUSD this week, I would rather need to see price action take out all the buy positions within the 1815 and 1810 zone to give me an opportunity to sell. So these are my views here on the XAUUSD this week. I hope I made myself very clear here. And if you have found this content helpful and useful in making your independent trading decisions for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find this material beneficial to them too. Thank you in advance for doing so, and trust me, at the beginning of the week I will be dropping my commentaries right in the description box below after monitoring how participants in this market will be reacting to this current structure during the early hours of the week. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you'll always stay updated with the latest ideas I share and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.